All right, my name is Junior Simmons with Atlantic Home Loans.
Say, what is your take on down payment assistance, and what programs do you guys have that's compatible or comparable to the down payment assistance?
I think down payment assistance is a great tool to help borrowers to get into a home, but there's things that they have to, there's guidelines that they have to meet. For example, a 640 credit score and the debt to income on a FHA loan cannot be over 45%. On a conventional cannot be over 50%. So we have to look at the overall picture of the borrower and make sure that they have enough income to support the payment and not too income to be eliminated from the program. So the first thing, in order to purchase a home, you want to make sure that you're prepared. The first thing you want to do is speak to a lender, follow the application so that they can look at your credit. Because there's a couple of things that goes into purchasing a home. One, it's going to be credit. Two, it's going to be income. Three, it's going to be assets. Because one, they want to know where you're going to get the money from for your down payment and your closing costs. And we have to look at your income. So if you're self-employed, or if you write off a lot of your income, it poses problems. So for example, you may be working $50,000 a year, but you go to your tax preparer at the end of the year, he creates a Schedule C business for you, he writes off $40,000. Then your income is down to $10,000. So you want to be very, very careful about the tax preparer that you're using. All right? So we're going to follow this form here. I go step by step. So a lot of time, most of you guys are paying rent. And you realize that the price of rent is going up and up. For example, a home that you were renting four years ago for $900 now, the same home is costing $1,200. Because more people move into the community and the builders are not building fast enough, it's pushing the price of homes up. The second thing that is going up is interest rate. Since this new government came in power, they have changed the way they're doing their financing. For example, interest rate 2-3 years ago, you could go to rate in the 3s. The average rate today is going to be in the high 4s and mid 5s. And that's just a new reality that we're living in. On top of that, the price of homes are going up. So by next year, it's predicted that the interest rate will be in the mid 6-7%, which is really the norm. 3 and 4% was not the norm. So rates are going to go up. So if you want to buy, you want to make sure you start buying now. The other thing that you're going to see is that the price of a home that you could have purchased last year for $160 is now $210. Next year it's going to be higher. So you got to get in the market now. You got to get prepared now. Because that rent you're paying on $1,200, 2 years from now it will be $1,400, $1,500. That's just the reality. When you buy a home, you tend to freeze your housing payment in time. For example, if you bought a house, say 20 years ago, you're probably paying $300, $400 a month. You buy that very same house today, your payment's going to be $1,500, $1,600. And if you don't buy today, in 10 years' time, the mortgage payment is going to be $1,900. So you have to purchase now, and that's very, very important. The next thing you got to decide when you sit with a lender, how much home can I afford? For example, just to give you a quick, if you're earning $1,000 a month, just an example, typically 40% of that, $400, is going to be towards your mortgage payment. So if you're only earning $2,800, and it goes on and on. It also depends on how many debts you have. So the first thing you want to do is make sure that you're reducing your debt. You're not charging up your credit card, because the more you charge your credit cards up, is the less your credit score becomes. Because when you're using a lot of credit, the way it looks to the lender is that you're strapped for cash. So you have no choice but to use credit. So you want to keep your credit cards below 30%. And you'll see an improvement in your score. Now you know what your credit score is. It determines what kind of loan you can get. For example, if you need down payment assistance, the minimum score you're going to be looking at is a 640. So you want to make sure that below 640, down payment assistance is not going to be a possibility. So if you need that down payment, you got to build your score up. Yes, we can go down to a 580 score on an FHA loan, and we can get a loan approved with 3.5% down. But the interest rate is going to be higher. It's going to be a much costlier loan than whether you have a 640 score. So once they decide that, then the lender will go through everything and will tell you how much you're qualified for. So whether it's going to be for a payment of $400 a month, it will tell you your max payment, and it's going to tell you your max purchase price based off of that payment. At that time, you take that pre-approval letter and you call your realtor and say, hey, I'm pre-approved for a home loan, and now I'm ready to start looking for a home. The biggest mistakes you can make is pick the phone up, speak to somebody for 10 minutes, and then they say, oh, you're pre-approved without looking at any financial. Because what they're doing, they're setting you up for failure. You sit with the lender, you go over your numbers, you go over your payment, you go over your estimated interest rate, and then that way, when you find a home from contract date to closing, it should not be no more than 30 days. If it goes over 30 days, then my processor have to tell me why is this running. Because I meet every morning, go over the files, making sure that from contract date to approval is done within 7 days. So we can send out that commitment letter. Once you have a contract within the first 24 to 48 hours, I expect the person to have done their official credit application is signed. We're ordering appraisal, we're ordering title, we're ordering everything that we need, because that's all we protect you. That you're not losing your escrow deposit, you're not running out of contract, you can't close any time. So that becomes a major issue. So you have to make sure that you're providing everything that you need to the lender so that they can get that thing done for you, okay? Mm-hmm. What are the different types of loan that you have?
FHA, conventional.
Okay, so FHA, typically it gives you one of the lowest down payment, 3.5% FHA. Conventional, you can go as little as 3% down. If USDA, you can get 100% financing. Typically, USDA is for rural areas. For example, if you look at Lake County, 100% of Lake County is USDA. So if you're buying a house in Lake County, if your income is below $74,000 and everything else lined up, you can get a home for 100% financing. And even better, if you buy in a USDA area and the appraised value comes in higher, you can actually roll the closing costs into the loan also. And that's the only loan that will allow you to do that. Any veterans we have inside here? Okay, great. I'm very passionate about veterans. I'm retired military myself, so that's the best loan pretty much on the market. So if you're a veteran, it's 100% financing. If you're service-connected disability from the VA, you don't pay any upfront mortgage insurance premium. So it's one of the best loans you have. So those are the 4 types of loan you have. With the loans now come with where we're going to get the money from for the down payment. So that's where people start looking for assistance from the government. If you have never owned a home within the last 3 years, you're considered a first-time home buyer. Okay, and even if you own a home and you have not occupied the property, you still can get assistance, because as long as it's not a primary, then it's an investment property, you're still able to get assistance to buy a primary. The type of assistance available out there now, we're going to have the SHIP program for Orange County. The challenge you find with the county SHIP program is that one, the maximum purchase price is only $200,000. So that kicks a lot of people out. Secondly, their restriction is much more than the actual lender. For example, you have 2 people in a household, you have husband and wife. Wife alone is on the mortgage. Husband credit is not good, they're going to deny you. because they pull both credit report, and that's why I tend to stay away from the SHIP program. But you have other options available out there for down payment assistance. There's what they call the Florida bond. What that does, it gives you $7,500 towards your down payment and closing costs. Typically, it will only take care of your down payment, but then you can negotiate with the seller to pay some of your closing costs, and that will minimize the amount of money you come out of pocket. Because that's why people get down payment assistance. Another one that we also do is where very few lenders does that. We do it is what they call a Chinoa fund. Chinoa, C-H-E-O-N-A. And what that does, and it's only good for FHA loan, it will give you a loan for your down payment. You pay it back over a period of, say, for example, 10 years, but then it gives you the opportunity to mitigate your out-of-pocket expense. Any questions so far?
Can you look into can you do a Florida bond with a VA loan?
Yes, typically you can actually do it with a VA loan, yeah. But then you start running into with some issues because VA loan only allow the lender to charge a certain amount of fees, yeah. So that's where you run into some problem with the VA. But it can be done if we can get the seller to pay some of the closing costs, you know. Then we can get that done. Okay. Any other question?
You touched on the 580. Is there extra documentation one would have to submit if they had a 580 approved?
Well, it depends. Because if you have a 580 score, that does tell that you put 3.5% down. The additional documentation will depend on the whole credit profile itself. For example, whenever you do a loan, you have to run it through the automated system. It gives you a certain level of approval. So if you get a full approval, then no. But a lot of times, if you get what they call a refer, not a full approval, then you may want to document to see that you're paying rent on time for the last 12 months. But typically, 90% of the time, a 580 score, you'll be just as good. You may have to pay a discount point to get a base rate. And that's the biggest time I found the 580 score. As the interest rate goes up, the lower the score, it becomes more challenging.
About how much is that discount point?
Yesterday, a price one out yesterday, it was on the price was coming at like about 5% with 2 discount points. So it wasn't really such a bad deal. Yeah. If you consider if you have a 740 score, your interest rate is going to be probably 4.5 in today's market. You know?
Okay, so but you said 5% plus 2 discount points, but about how much?
No, 5% interest rate.
With 2 discount points?
Yeah, a discount point is 1% of the loan amount. So for example, the loan amount is 100,000, then the discount point in this case would be 2%, which would be 2,000.
So it would be that down payment plus the discount point?
Yeah, and plus closing costs. So a lot of time with 580, you want to probably negotiate some closing costs, etc. So we know going down, we know FHA is 3.5% down. VA, no down payment. Conventional, 3% down. USDA, no down payment. Okay. Your personal house, there's no money available from the government to give. So a couple of options you have. If you have a 401k, you can actually utilize that funds from your 401k. They allow you to use probably 60% of it towards your down payment, and you can actually pay it back in over a 15-year period. You can get a gift from a family member.
Of how much? How much?
Well, I mean, it depends on the family member, you know? No, I mean, think about it, man. Is that if you want, okay. The reality, last year, for example, when I was teaching this class, I could tell you guys, hey, we can do the Florida bond, you can get 15,000. And it wasn't a problem. They have cut that back to 7,500. And the reason why, they don't need to offer 15,000 to buy homes. Because if you don't buy it, someone else is buying it. The only reason why they brought that 15,000 was to, because there were so many foreclosures and people was not buying a house, they put a lot of incentive for people to buy homes. So the incentive is not there anymore. You know? So one thing that I encourage people to do, try to save, you know. You know, you're buying a house 6 months down the road, a year down the road, you gotta start saving, you know. Stop doing your hair so much, stop eating out so much. I mean, these are just a reality, you know. You gotta kind of tighten up because the government is getting away from helping people who need the help, you know. So now we have to find a way to help ourselves. What I've seen a lot is that brothers and sisters are buying a house, mother and children. Because the reality is that if you look at, say for example, this area here, the average price of home is about how much in it?
This area?
Uh-huh.
Well, about 225.
Okay, and go back 5 years ago, the average price was probably 80,000.
Yeah.
Go back in 2004, the average price was about 230.
Just 2 years ago, we was sitting at 185.
Yeah, you know, so let's keep going up because the reality, we had 1 million people move here from Puerto Rico who needs home. We have people moving here from up north who needs home. We have people migrating here who needs home, you know. So the reality, the builders cannot build fast enough. So demand and supply is pushing the price of homes up. Checklist of what you need to prepare. Because buying a home, it takes preparation, you know. So if you're serious about buying a home, you want to go home and you want to start working on this list. You want to start working on getting your last 2 years tax returns, all pages. You want to work on getting your W-2s for the last 2 or 3 years, depends if you're trying to get assistance. If you're trying to get assistance, you think 3 years on your tax returns. You want to make sure you get 1 full month of pay stub. So if you get paid twice a month, 4 times a month, you make sure you have 1 full month of pay stub. And you want to make sure that you have your 401k statement. So your last quarter 401k. You want to make sure that you have your last 2 months bank statement. If you get, if your income is from Social Security and from retirement, those are income. If you have kids that you're getting Social Security from, you'll make sure that you disclose that. If you get child support, alimony, you can actually use those as income, okay? So you put all of those documents together, and then you set up a time, and you either scan them or bring them into your lender. And that time he can sit with you and he can properly put up for you.